All right, welcome everyone to the deep dive. Today we're going to be jumping into something pretty interesting. Oracle's financial results for their third quarter of fiscal year 2025.
Yeah, hot off the presses. They just released these on March 10th, 2025.
And we've got the press release right here in front of us. And I think, it's a lot of numbers and tables and things like that. So we're going to try to break it down for you in this deep dive.
Yeah, try to pull out those nuggets of insights and make sense of it all.
Exactly. Because, I mean, at the end of the day, we want to understand where Oracle stands right now. How are they doing financially and where are they heading in the future?
Yeah.
So let's just jump right in. One of the first things that jumped out at me was the remaining performance obligations, or RPO. It's a pretty big number. It's $130 billion with a B.
That's a big number. Yeah.
It's huge, and that's a 62% increase year over year in USD.
63% in constant currency, even.
Wow, even bigger.
Yeah.
So, I mean, what does that tell us right off the bat?
Yeah, that's a really interesting number because the RPO, it's basically the value of all the contracts that they've already signed that they haven't yet delivered on or recognized as revenue. So a 63% jump year over year means that they've really been busy signing a lot of new business, a lot of new deals, and it gives them a lot of visibility into their future revenue stream.
So even if things slow down, they've got this huge backlog.
Exactly. It's a nice cushion, and it gives them a lot of flexibility to invest in things like data center expansion that we'll talk about later on.
Makes sense. And I think Safra Catz, their CEO, she actually said that they signed over $48 billion in sales contracts just this past quarter alone.
That's a big quarter, yeah.
That's huge. And she called out specifically major cloud agreements with some very big names: OpenAI, xAI, Meta, NVIDIA, AMD.
Those are some big names in tech, especially when you think about, the broader picture. Those are companies that are really at the forefront of artificial intelligence. So Oracle landing these deals really emphasizes the role that they're playing in providing the infrastructure for computationally intensive tasks, especially in the world of AI.
It's interesting how those companies are really choosing them for their AI work.
Yeah.
So let's talk a little bit about their actual revenue numbers. In Q3, their total revenue hit $14.1 billion. That's a 6% increase in USD, or 8% if you take into account the currency fluctuations. But it looks like the real story here is with their cloud business, right?
Absolutely. Their cloud revenue grew to $6.2 billion, and that's a 23% increase in USD, and that's combining their infrastructure as a service, which is IaaS, and software as a service, which is SaaS.
So just to kind of break that down for people who might not be super familiar, IaaS is basically the building blocks, the servers, the storage, the network, the raw materials in the cloud, right?
Yeah, exactly. It's the underlying infrastructure. And then SaaS is more about delivering software applications over the internet. So think of things like their Fusion Cloud ERP or NetSuite. These are kind of prepackaged software products that people can just use.
Okay, and it looks like IaaS is really leading the way here in terms of growth.
Yeah.
They grew a massive 49% in USD, which translates to 51% in constant currency, up to $2.7 billion.
Yeah, that's a significant jump, and it really likely reflects that high demand that we were just talking about related to AI and high-performance computing. So companies are needing that underlying infrastructure to power these really demanding applications.
So they're definitely benefiting from that trend.
Yeah.
Now, on the SaaS side, growth is still pretty healthy, though, right?
Yeah.
$3.6 billion, up 9% in USD, 10% in constant currency.
Still very respectable growth there, and it's interesting to see some of the specific areas within SaaS that are doing well. Both Fusion Cloud ERP and NetSuite Cloud ERP reached $0.9 billion in revenue and grew by 16% each in USD. So that really suggests this continued strong migration to cloud-based enterprise resource planning systems.
Yeah, those are mission-critical applications for businesses of all sizes.
Absolutely. And it looks like companies are increasingly relying on Oracle's cloud solutions to handle those really core operational needs.
Now, if we look at the flip side of that coin, their traditional licensing model, that seems to be continuing to contract.
Yeah.
Their cloud license and on-premise license revenue decreased by 10% in USD to $1.1 billion. Not a huge surprise, but it definitely shows the trend, doesn't it?
It does. It really reinforces this ongoing shift across the entire tech industry towards these subscription-based cloud models.
Makes sense. All right, let's move on to profitability, which is always something that investors are keeping a close eye on. And the numbers here look pretty positive. Their GAAP earnings per share, or EPS, jumped by a significant 20% to $1.02. And even their non-GAAP EPS saw a 4% increase to $1.47.
Yeah.
Similarly, their GAAP net income was up 22% to $2.9 billion, and their non-GAAP net income rose 6% to $4.2 billion. So what's driving these increases?
Well, I think there are probably several factors at play here. The robust revenue growth, particularly in the cloud segment, which often has higher profit margins, is definitely playing a big role. And then also, effective management of their operating costs can also boost profitability. So it's likely a combination of those things.
Okay, and you mentioned GAAP and non-GAAP. Maybe just explain that quickly for people who might not be familiar with those terms.
Sure. So GAAP stands for Generally Accepted Accounting Principles. It's a set of standardized accounting rules that companies have to follow. And then non-GAAP adjusts for certain items like stock-based compensation or the amortization of intangible assets to give more of a view of their ongoing operational performance.
So it's kind of two different lenses on the same picture.
Right, exactly. It's
Ah,
useful to understand both of them.
got it. Now, their operating income also showed some healthy growth. GAAP operating income was $4.4 billion, while their non-GAAP operating income reached $6.2 billion. That's a 7% increase in USD or 9% in constant currency. So it seems like their core business operations are doing pretty well.
Yeah, these figures suggest that Oracle isn't just increasing sales, they're also managing their expenses pretty effectively within those primary business areas.
All right, so lastly, let's look at cash flow,
Yeah.
which is, another important indicator of financial health over the last 12 months. Operating cash flow was a very strong $20.7 billion.
Wow.
Although free cash flow was quite a bit lower at $5.8 billion. They also reported short-term deferred revenues of $9 billion.
Yeah.
So what should we take away from these figures?
Well, the strong operating cash flow really indicates the company's ability to generate cash from this core business activities. Free cash flow is often impacted by significant capital expenditures. And we know that Oracle is making these big investments in data center infrastructure, so that could be a factor there. And then the $9 billion in short-term deferred revenue is another positive indicator. It basically represents cash that they've received for services that haven't been delivered yet, so it will turn into revenue in the future.
So it's kind of like money in the bank waiting to be recognized.
Yeah.
Okay, so now let's shift gears a little bit and talk about their strategic direction. Where do they see things heading in the future? And we already touched on those major cloud customer wins with some of those big names in AI. And Larry Ellison, who's the chairman and CTO at Oracle, he actually made a pretty big statement. He said they're planning to double their data center capacity this year alone
Wow.
to keep up with this record demand.
Yeah, that's a massive undertaking, a huge investment, and I think it really reflects their belief in the continued growth of their cloud services, especially to support these large-scale AI deployments that are becoming increasingly popular.
It sounds like they're not just reacting, they're trying to get ahead of the curve.
Yeah, they're being very proactive, trying to make sure that they have that infrastructure in place to meet that demand as it continues to grow.
Another interesting point is the growth in their database multi-cloud services with Microsoft, Google, and Amazon. Their revenue in that area jumped by an impressive 92% in just the last 3 months. That really speaks to this idea of meeting customers where they are, right? Even if it's on a competitor's cloud platform.
That's what I think is so fascinating about that they're acknowledging that a lot of large organizations are going to be operating in this multi-cloud world using different cloud providers. And by offering their database services across all these different platforms, they're really broadening their reach and giving their customers that flexibility to use what works best for them.
And I guess that 92% growth shows that there's a real demand for that.
Definitely.
Now, the focus on AI is undeniable. We talked about those big customer wins,
Yeah.
the data center expansion. Ellison also highlighted a pretty remarkable 244% growth in GPU consumption for AI training over the past year, as well as what he called an enormous demand for running AI inference on private customer data.
Huh.
Wow, 244%.
Yeah.
That really puts into perspective the scale of AI development that's happening on their platform. Do you think that growth is sustainable, or is that just like a temporary spike?
Well, it's hard to say for certain, but while such rapid growth rates might moderate a little bit over time as that initial wave of demand kind of stabilizes, I think the underlying trend of increasing AI adoption across pretty much every industry suggests that there's going to be a continued strong demand for the infrastructure to support all that.
So Oracle's really well positioned to capitalize on that.
Absolutely. They've secured those major players as customers, so they're definitely in a good spot. And I think that demand for private AI inferencing is a really important trend to watch because a lot of companies want to be able to leverage the power of AI on their sensitive data, but they need to make sure that it's secure and that they have control over it.
Right, they don't want to just send their data out to some third party.
Yeah.
And speaking of new developments, they've actually rolled out a new product called the Oracle AI Data Platform, which is designed to connect leading AI models like OpenAI's ChatGPT, xAI's Grok, and Meta's Llama directly to Oracle database, and it offers advanced vector capabilities. The emphasis here seems to be very heavily on data privacy and security. So for someone who's thinking about, integrating AI into their business, what are the key advantages of having a platform that's focused on data privacy like this?
Well, I think this is a really strategic offering from Oracle by tightly integrating these popular AI models with their established database technology and putting that emphasis on data privacy. They're really trying to create a unique selling proposition in the market because a lot of organizations, they have legitimate concerns about moving their sensitive data to external platforms for AI training and inference. So this kind of platform where they can actually leverage these powerful AI models on their own data within a secure environment, that's potentially very attractive.
Takes away a lot of the risk and the fear, I
Yeah.
guess. Now, Ellison also mentioned something called a Stargate contract as a future opportunity that could potentially expand their AI training and inferencing businesses significantly. We don't have a lot of details on that, but it sounds pretty intriguing.
It does, and the fact that the chairman and CTO highlighted it suggests that this could be a really big deal, a potential game changer that could further solidify their position in the AI market.
Something to watch out for, definitely. And finally, in a move that I'm sure shareholders will be happy about, Oracle's board of directors announced a 25% increase in their quarterly cash dividend, bringing it to 50 cents per share. That's a pretty substantial jump.
It is, and it really reflects the board's confidence in the company's financial strength and their optimistic outlook for the future. Increasing the dividend is a way to directly return value to those shareholders, and it's often seen as a positive signal about how the leadership feels about the company's performance and its prospects. Yeah.
Definitely a vote of confidence. Okay, so let's kind of zoom out a little bit and look at the broader picture, their year-to-date performance for fiscal year 2025. For the first 9 months, their total revenue reached $41.5 billion. That's a 7% increase in USD or 8% in constant currency. And once again, cloud services and license support are the main growth drivers here, up 11% in USD to $32.3 billion.
Yeah, these year-to-date figures really just reinforce the trends that we saw in Q3. That consistent upward trajectory of cloud revenue is the key takeaway here. It shows how they're successfully transitioning to this more cloud-centric business model.
It's really a fundamental shift for the company.
It is.
Now, profitability for the first 9 months also looks pretty strong with GAAP net income at $9 billion, up 23%, and diluted EPS at $3.15, up 21%. Their ability to generate cash also remains healthy with net cash provided by operating activities at $14.7 billion for the year so far.
Yeah, I think these broader year-to-date numbers really confirm that the positive results from Q3 weren't just a fluke. Those significant increases in net income and earnings per share, they really showcase the financial benefits of this cloud-focused strategy.
It's all starting to add up.
Yeah.
Okay, so as we wrap up this deep dive, what are your biggest takeaways? What are the implications of all this for our listeners?
I think the main story here is really the strong and accelerating growth of Oracle's cloud services division, especially in the infrastructure segment. And this growth is being driven by that increasing demand for AI capabilities and those key customer wins with those big AI innovators, and then that massive $130 billion in remaining performance obligations really points to a very bright future in terms of revenue growth.
They've got a really solid pipeline, it sounds like.
Exactly. And then beyond that, their investments in things like multi-cloud solutions and that new AI data platform, it seems like they're really well positioned to capitalize on these new trends in the market and the dividend increase, that also reflects confidence in their financial future. But I think it's also important to acknowledge, the declining traditional license revenue. That's a trend that's not going away.
Yeah, it's a sign of the times.
Exactly.
Okay, so to sum it all up, Oracle's third quarter results for fiscal year 2025, they paint a picture of a company that's on the move, experiencing some real success in its cloud business. This is being fueled by major wins in the AI space, and they've got a huge backlog of contracts. Their investments in data centers and AI platforms combined with that commitment to returning value to shareholders. It really shows that they're a company that's actively shaping its future in what is a very rapidly evolving tech landscape.
And it really leads to a question for our listeners, with this rapid expansion of AI infrastructure and the launch of the Oracle AI data platform, how is Oracle's focus on data privacy and these multi-cloud partnerships going to differentiate them in what's becoming an incredibly competitive AI market? And maybe even more importantly, how could this impact your business as you start thinking about developing your own AI strategy?
A lot to think about. Thanks for breaking it all down.
Yeah, thanks for having me.
And thanks to all of you for listening to The Deep Dive.